So Ms May later talked about a deep and special relationship, but of course she prodded the situation. She put security in there 11 times. Some say it was a conciliatory letter, however others see it as provocational. How did UBS read it?
I think it was pretty much as expected, to be honest with you, Manus. You know, there was some fairly logical and rational thoughts laid out, but they were the ones very much reflecting the UK side of the argument. And then when we heard back from the EU very swiftly afterwards, essentially, they were also sounding fairly conciliatory and constructive, but putting their side of the argument. And when you actually look through the warm words, it's very clear there's a very wide gulf in a lot of areas between the two sides.
Wide gulf, despite Donald Tusk saying we miss you already, which was a nice touch. We suspect that this struck me as interesting from your notes. You think the differences will be very hard to reconcile, which of course many have pointed out, and even the letter pointed out the challenges in reconciling, in achieving what's needed in 2 years. And so many of the unanswered questions may remain very unanswered until very close to the deadline.
Yeah, I mean, that's the biggest worry to us, is that the differences are very marked, and both because of that and because, especially from the EU side, there is a sort of logic behind negotiating tactics to wait until very late in the day before giving ground on some of these things. It seems very likely to us, now we have a date effectively set in stone, that the closer we get to it, the more businesses, consumers, markets worry that we have a lack of clarity about what lies beyond.
And is that economic uncertainty? It's almost like we're tethered to 2 years of steep uncertainty. From a market perspective, from a bond market perspective for you, one of the consequences, Anna and I looked at it at the start, which is the FTSE and the impact of an 18% drop in the pound. But the quid pro quo is, of course, the ratcheting in inflation. These are the 5-year and the 10-year break-evens. And this is what your world looks at. These are the issues for markets, which is about the propensity for further inflation. Have we peaked in terms of that move? Because
no. Well, we have probably. We think so in terms of market inflation expectations,
right?
But not in terms of the headline inflation prints. The fall in sterling started in late 2015. It obviously accelerated after the referendum last year, and that's all still feeding through into the headline numbers. So whereas we would suggest in the Eurozone, the US, we're getting close to the peak in this current uptick in inflation. We're not there yet in the UK. So for the bond markets, they have a lot to wrestle with at the moment. They're seeing headline inflation accelerate. That ordinarily would cause bonds to sell off, but they've got all of these much greater and more persistent worries about what's going on in terms of the negotiations and therefore for the real economy.
But you think that all of that is already, so it's not in the headline or the numbers yet, it's not in the inflation numbers yet, but it is in the bond market expectations, you think?
Yeah, I mean, you know, the markets can see what's coming. This fall in sterling, as I say, has been going on for almost 18 months now. The rise in underlying prices, in energy prices and so on, which has corrected a bit recently, is also well established, and people can see what that is going to feed through to in terms of year-on-year inflation. The bigger questions are whether it's going to prove sticky or whether after a time it proves to be a sort of temporary flare-up and then falls away again.
Your notes made an interesting read. The minutes from the 15th of March stated that some members noted that it would take relatively little further upside news or on the prospect of activity or inflation for them to consider more immediate reduction in policy support. Anna and I have been asking, you were talking to Moritz Kramer about this yesterday on the Green. We've talked about it several times. This is FCON. This is the financial conditions in the UK. That's not screaming to me that we're at a point, this is from Brexit last year, that we're at a point of where our conditions are fading. They can ride it out. They can ride it out for 2 years, John?
Oh, yeah, we think so. I mean, you know, you have to respect what it says in the minutes. We've already got 1 of 9 members voting for a hike. There are, you know, what some means is obviously open to interpretation, but it suggests it means more than one other is leaning that way.
Could I ask you, could they undo that emergency? I was standing outside the Bank of England last year. They did QE and they did an emergency cut. Could he unwind that without much hassle? I know QE is coming to an end, but could he unwind the emergency 25?
Arguably, but we would suggest not, because the problem is, or the issue would be, as you're seeing, for example, in the US, that once you take a step down that road of tightening monetary policy, the markets immediately are sort of trying to interpret when you're going to move next.
Yeah.
And you don't just get, unless you absolutely pre-commit to it, one move and then the market assuming that nothing's going to happen again.
And
so
I suppose
think they'd shy away from that.
arguably he didn't need it when he did it, but he might need it in the future.
arguably, but I think, you know,
Weakness in data.
She's going counterfactual on
No,
us.
just because of the weakness in the data
Well,
that you foresee.
Yeah, exactly. And, you know, we would also say that, you know, we have some sympathy for the view that that arguably, although growth has been strong, that doesn't mean it wasn't necessary. You can argue that some of that strength in growth, resilience of confidence and so on is because of what they did. So I don't really buy the argument that it was totally unnecessary. That does seem a little bit sort of counterintuitive to me. But yes, we do think going forward that the data is going to soften, potentially quite materially, and actually for us the debate on the MPC is going to be how they respond to that rather than whether they respond to the current picture on inflation.